Okay. Good morning, everyone. Good morning, Syed. Good morning, Nidhi. Good morning. So this is the sixth batch of the virtual coaching classes, and we are going to start with Ind AS 113 that deals with fair value measurement. Okay. So you would have already been introduced to Ind AS. You would have understood what is the uh, change that has happened from the previous gap regime. And in that context, this standard becomes particularly very important. Okay, from an examination perspective, you do get occasional questions. Not much of computation is involved in this, but the concepts which you draw from Ind AS 113 has a wide implications in the other accounting standards that you would be studying. Okay, so why this Ind AS 113 was introduced and what does it contain? So this is what we are going to discuss in this particular standard. Okay. Good morning, Asha. Good morning, Viraj. Good morning. Okay. All right. So what we would be covering basically in these sessions, that is today and tomorrow, is what was the reason for having Ind AS 113? What is the objective and scope? And what exactly do we mean by fair value? And when we talk about fair value, there are certain aspects which we would be discussing, like what do you mean by asset or liability specific fair value? What is the meaning of a unit of account? What do you understand by market participants, appropriate market, as well as the price? Then we move on to valuation of non-financial assets, valuation techniques, inputs to valuation, adjustments to quoted price, approaches to the valuation. And after the assets are done, we move on to applying the fair valuation rules to liabilities and equity and offsetting items. Then fair value at initial recognitions, and then we'll do a couple of questions in the course of this discussion. Okay. So this presentation is already there for you to download from the BOS app. So I hope you have downloaded this. There won't be much to write because the presentation contains everything. Wherever there are questions, we'll try to solve them, but the questions are not much in number, so you will be able to do it quickly. Okay. So with this background, let us start with Ind AS 113, the proper standard. So why do I need Ind AS 113? Why do I need Ind AS 113? Okay. See, many times what happens is there could be an exchange of assets and liabilities, and these may not be at arm's length prices. These may not be at arm's length prices. Sir, what do you mean by arm's length price? Well, arm's length price is typically a price that a informed market participant enters into with another informed market participant for the transfer or sale of a particular asset or a liability. So this is what is an arm's length price. Many times it may not be the case. Why it may not be the case? Well, it depends. For example, these could be related parties. Suppose a parent gives a loan to a subsidiary. Do you think the parent will charge interest at the market rate? Answer is obviously no, because there is a relationship between the parent and the subsidiary. Suppose you are, another example, suppose you are having a customer who contributes 95% of your revenues, a customer contributing 95% of your revenues. When that is the case, you will go all lengths to please that customer, to satisfy that customer. In what way? You will relax the payment terms. You will give good quantity discounts. You will give discounts for prompt payments over and above what the market generally gives. So this is what we mean by transactions not happening at arm's length prices, but they are happening at agreed terms and conditions. There will be a contract, there will be an agreement, but the issue is these terms and conditions may result in the transactions not happening at arm's length prices, not happening at arm's length prices. So if I have to define the term fair value, all the assumptions or adjustments that are required to change the transaction to change the value from transaction specific to a normal transaction. All those adjustments have to be done. So basically, we have to move from entity specific value to a market based value. And this is what Ind AS 113 tells us. Okay, you have entered into a transaction, fair enough. But if it is not the arm's length transaction, there will be certain adjustments. And when you do those adjustments, you will then arrive at a market-based value. When you study financial instruments in the future, for example, an entity may give loan to its employees at a concessional rate of interest. So suppose a personal loan is available in the market at say 12% rate of interest. The entity will give the same loan to its employees for a 4% rate of interest. Now, the advance is given, say 1 lakh rupees is given at 4%. Is it a fair transaction? Is it a fair transaction with the employee? Answer is no. Then why have you given it? Ind AS 109 will tell that this is not the way the transaction has to be accounted. We will have to do some discounting, some working to arrive at what will be the fair value of the advance, and whatever extra you have given in the form of a concessional loan, that would be regarded as a salary cost which you are recovering from the employee. So this is the adjustments that Ind AS 109 will tell, and those adjustments are in line with Ind AS 113. Those adjustments will come in line with Ind AS 113. So therefore, every transaction has to be monitored, and if there are any special clauses, if there are any special any special treatments which are offered, which is not in line with what the market participants transact into, then we make adjustments for those treatments and arrive at what is a market-based value. So when I talk about fair value, it is primarily going to be a market-based value. Is it okay? So far, is the content clear? Yes. Any doubts? Any doubts? So when I talk about fair value, what I mean is it should be a market-based value. It should be a market-based value. Good morning, Shriram. Good morning, Namrata. Good morning. Okay. Yeah, it should be a market-based value. Now, why this separate standard of 113 was required? We did not have a similar standard under IGAAP. So, under IGAAP, no separate standard. Under Ind AS, we have Ind AS 113. It is drawn from IFRS 13. It is drawn from IFRS 13. So, what was the reason that the standard setters thought that we need a separate standard on fair value? You would have studied in the introductory sessions that you had that Ind AS moves from a historical accounting model to a fair value based accounting model. The system, the statement is not entirely correct when always you say that we move to a fair value accounting system. It's not entirely correct. But yes, the importance that is given to fair value has become infinite. The importance given to fair value has increased tremendously under the Ind AS regime. For example, just to give you an example, I have, as I discussed, loans given to employees, 4% interest, whereas the market rate is 12% interest. Is this a fair value, this transaction? Is this a fair value? Answer is no. It is not fair value. Okay. And when it is not fair value, there was no treatment under the IGAAP regime to do an accounting or the fair valuation of this transaction. How would you account for it in IGAAP? Well, you would take it, suppose you have given a 1 lakh loan at 4% interest to your employee, then that 1 lakh rupees would be regarded as an advance, and you would collect 4% interest, and whatever is the amount, you would collect it from the employee's salary. So this is the treatment that you would typically be doing under the Ind AS, under the IGAAP regime. But suppose you are a banking company and for the same loan, same tenure, you have given a 12% interest. You have given it on a 12% interest with your market participant. Now here Ind AS has a problem. Here Ind AS has a problem. Ind AS tells us this transaction is not fair. This transaction is not fair. So if it is not fair, Ind AS tells us how to make it fair. And how to make it fair is what is given in the standard on financial instruments. How to make it fair is what is given in the in the chapter on financial instruments. This treatment was not there under IGAAP because fair valuation was not a prevalent concept under the IGAAP regime. Now it has come into picture. Suppose you have trade receivables. Suppose you have trade receivables. For one customer who accounts 95% of your sales value, you are offering a 90 days credit. You are offering a 90 days credit. Whereas the same industry in which you operate, the industry standard is 30 days credit. You are giving a 90 days credit. The industry standard is 30 days credit. Think about it. Is this a fair transaction? Answer is it does not appear to be so. I am giving an extra benefit because my whole business is dependent on that one customer who is giving me a 95% sale value. And therefore, there may be some adjustment. I'm not saying there will always be. I'm saying there may be some adjustment that would be required when we look at the standard on Ind AS 109 that deals with financial instruments. So therefore, these are the nitty-gritties which we now look into. Under AS, this would be regarded as a normal trade receivable. Okay. Or suppose there would be a 2-year credit period. A 2-year credit period. Is it normal for somebody who is dealing in goods? Is it normal to give a 2-year credit period to your customer? Answer is it's not normal. If it is not normal, that means there is probably a financing component which is hidden in this particular transaction. So we will have to separate that financial component from the sale component and then do the accounting accordingly. So these are what Ind AS starts to view the transactions as. It goes into the root of the transactions and evaluates ki bhai whether this particular transaction is fair or not. And that is why we have a separate standard on fair value measurement. Fair value measurement, this standard does not give any rules. This standard does not give any rules. Sir, rule nahi deta to fir ye standard kaise ho gaya? This does not give rules. It gives you principles. It gives you principles. Sir, what is the difference between rules and principles? Rules are what you can say, rules come with a set of boundaries. Rules mean that you have to follow these particular rules, only then you can do the accounting. If you deviate from the rule, that becomes a non-compliance. And if it becomes a non-compliance, then that starts getting reported in the auditor's report or wherever it is. But in a principle-based approach, that is not the case. In a principle-based approach, you may even deviate from the principles if you have a justifiable reason to do so. So therefore, we are coming from the International Accounting Standards Board, which prescribed a principle-based approach as compared to what the US GAAP follows, a rule-based approach. So therefore, our accounting which is drawn from IFRS, our accounting, which is drawn from the international accounting standards, they are focusing more on applying the principles. Principles give a lot of flexibility when we do the accounting. So 113 does not give you a list of assets, a list of liabilities, a list of equity instruments, and tell you that this is the fair value. This is how you calculate the fair value. No. Ind AS 113 tells us that for each item of assets and liabilities, it gives broad guidelines that when you have to calculate the fair value, please determine using these principles. For example, if I have to value an equity share, you have invested in equity shares. So how can I determine the value? Well, if it is a listed value, it could be the market value of the share that is traded on the NSE or the Bombay Stock Exchange. Or you could do a valuation using the DCF model, for a share, which ultimately converges to what you and I know as the Gordon's formula. You could do this. Alternatively, you could use something known as the Williams-Sharpe's model. That is the beta factor. You can use any of this. Ind AS 113 does not prohibit you. But Ind AS 113 tells what is preferred over the other. And then you have a choice to decide how exactly will you do the valuation. So they are only guiding principles which are given in Ind AS 113. Why was this standard required? We have moved from a not so fair value regime to a fair value regime. And because we have moved, in every standard, we have the term fair value that is coming into picture. Now, standard setters had one option. In each standard, wherever they use the term fair value, they would have to describe what is fair value, define what is fair value, and give the method how to compute the fair value. That means don't have 113. Instead, you do all the fair value discussions in the respective standards. That would mean that my existing already bulky standards would become even more bulky, and it would be a duplication of efforts. So what the standard setters thought is, we will not define fair values in those respective standards. Instead, we will have a separate standard on Ind AS 1 on fair value measurement, and that particular standard will take care of the fair values measurements of all the standards wherever the fair value definitions are not given. So therefore, this is the gateway for your Ind AS accounting. This is the first standard that you will always have a knowledge of practically when you do the accounting under the Ind AS regime, when you do the reporting under the Ind AS regime. Okay, so when I move further, what would happen without Ind AS 113? See, there has been a shift in accounting perspective. That means we have moved from a primarily cost model of accounting to a fair value model of accounting. Fair value किसमें दिखता है? Well, 109, suppose you have investment in equity, you will always need to do a fair valuation. Ind AS 40, investment property, requires a disclosure of fair value. Ind AS 105, non-current assets held for sale. What do? You will always calculate them at fair value. You will always determine the fair value, and then you will do the accounting. So this is why you are going to need your fair value diktat. You are needing the fair value guidance for this reason. If these guidelines were not available, you would not achieve a true and fair view. Airtel Limited will probably give a fair value of the spectrum it acquired at X. Reliance Jio will give the spectrum fair value as Y, and Vodafone will give the spectrum value as Z. Now, if X, Y, and Z do not have a standard basis of computation, then it starts affecting the true and fair view. And when it starts affecting the true and fair view, it goes ahead and interferes with the two fundamental characteristics of your financial statements, that is relevance and faithful representation. These are the fundamental characteristics that start getting affected. And additionally, Airtel, Jio and Vodafone in our example are doing a fair valuation of the spectrum that they acquired. And if all of them have their own set of policies, their own standards of valuation, then verifiability as well as comparability starts to get violated. And these characteristics are all mentioned in paras 2.8, 18 and 30 of the conceptual framework for financial reporting. Any financial reporting, any financial statement that you prepare must comply with the conceptual framework for financial reporting. This was introduced somewhere in the last year for you as students. So practically, we are bound by this conceptual framework. We cannot deviate from this. Okay. So the conceptual framework, as important it is for the preparer of financial statements to know the conceptual framework, equally important it is for the auditors to understand and to to determine whether the financial statements are prepared in accordance with the conceptual framework or not. So therefore, 113 ensures that you are complying with the framework, and that is why this standard starts to gain significance. Okay, so this is in brief, these are the two pages where we have discussed what was the need for Ind AS 113. Any doubts, any issues so far? Yes. Any queries? Am I too slow, too fast? All clear? Yes. Too slow, too fast? All clear? All well? Yes. Sayyad, Asha, Viraj, Namrata, Nidhi, others who are watching, please confirm. Okay, great. All right. So now we come to the standard per se, and we then move on to what is the objective of Ind AS 113. The objective is to define fair value. The objective is to define what do you mean by fair value. And in a couple of minutes from now, we will see a very beautiful definition of fair value. It's one of the classic definitions that you have, and nowhere in that definition you will find a rule-based approach. You will have only a principle-based approach. You follow the principles and you can understand and appreciate that why these particular standards start to get more and more interesting to apply. Okay. The objective is to define fair value. So we see this definition today. The objective is to set out in a single Ind AS. So when you are preparing the financial statements tomorrow after you qualify, which all of you certainly will, and you join the industry, some of you would join the industry. So when you join the industry and you have to prepare Ind AS financials, then your objective will be to refer what do you mean by fair value. That time you will not run through pages in the standard and say where is fair value. Just come to 113. In a single Ind AS, you will be given the framework for measuring the fair value and the disclosures that are required for fair value measurement. So definition of fair value, framework for measuring fair value, and the disclosures. All these things are given under Ind AS 113. Okay. So what is the applicability of Ind AS 113? When another Ind AS requires or permits fair value measurement. For example, 109. 109 tells us that we have to do a fair valuation. How you do the fair valuation comes under 113. Similarly, Ind AS 105, non-current assets held for sale, you have to state them at cost or fair value less cost to sell, whichever is lower. So 105 gives the requirement you have to do a fair valuation of the assets which you are holding for sale. But does it prescribe how? No, it tells us you refer Ind AS 113. So you are having certain standards where they tell do a fair valuation. And they just stop at that. So that point of time, you will move on to 113 to see how the fair value will be determined. But there are some standards which come with a selective requirement, which come with a selective applicability. So when I look at non-applicability, there could be standards where both measurement and disclosure Ind AS 113 will not apply. Sir, tab kya hoga? तब ये होगा कि the respective standards will tell how to calculate the fair value. For example, Ind AS 102, which we will be doing 2 days from now, share-based payments. In the case of share-based payments, the standard Ind AS 102 only prescribes how you have to do the fair valuation. So you will not come to 113 and look, because the manner of accounting, the manner of determining the fair value, everything is given in Ind AS 102. When I do 102, I will not come to 113 because 102 gives me all that guidelines there. Similarly, leases, Ind AS 116. We have to recognize a right of use asset and a lease obligation. How do I account? Which borrowing rate do I use? How do I determine the lease liability? How do I amortize the ROU asset? All these guidelines are given in Ind AS 116. Typically, 116 tells us you have to use the internal rate of return for the purposes of determining the lease liability and the corresponding ROU asset. And if you cannot determine the internal rate of return, then at that case, you will have to determine your incremental rate of borrowing and calculate the lease liability. So this guideline is prescribed under the standard on leases. We will not come to 113 to do that. Okay. And in some cases, you are having transactions which are similar to fair value, but they are not actually fair value. For example, net realizable value. What is net realizable value? The selling price minus the cost to make the sale. This is under Ind AS 2 on inventories. It appears to be a fair value. It appears to be a fair value, but it isn't. So the manner of computing and the disclosures, everything is given in Ind AS 2. Or you would consider something known as value in use in Ind AS 36. Value in use in the standard on impairment. That is also defined. How do you determine it under Ind AS 36? It is not going to come under 113. But there are some standards where measurement principles apply of Ind AS 113, but disclosures will apply of the respective standards. For example, plan assets. Do you guys know what are plan assets? Yes. Under Ind AS 19, do you know what are plan assets? Well, plan assets, suppose you have to pay gratuity to your employees. Suppose you have to pay gratuity to your employees. Now, gratuity liability accrues during the service of the employee. Gratuity liability accrues. You cannot say that after 20 years when your employee retires, that time only the gratuity liability accrues. No. Gratuity liability will accrue from the very first day of his service. And then it will go on building up till the date he resigns or the date when he retires. So what you are going to do is basically you will pass the entry gratuity expense. This is a provision entry to provision for gratuity. This is the entry that you are going to pass every year. Every year you will make a provision for gratuity. In this entry, there is no cash flow. There is no cash flow. So आप तो मस्त अकाउंटिंग करते जाओगे हर साल आप एकदम करेक्टली एक्यूरेटली यू विल डू द वर्किंग यू विल एस्टिमेट द ग्रेचुइटी ऑल सेड एंड डन वेरी फाइन बट ऑन द 20th ईयर जब उसका टेन्योर खत्म होता है दैट पॉइंट ऑफ टाइम आपको सिर्फ लायबिलिटी अकाउंट नहीं करना आपको लायबिलिटी डिस्चार्ज करना पड़ेगा यू विल हैव टू पे ऑफ दिस लायबिलिटी एंड व्हेन यू हैव टू पे ऑफ दिस लायबिलिटी यू नीड कैश. You need money. And when you need the money, unless you set aside an amount every year, it is very difficult to determine how much. It is very difficult to arrange cash at the end of the 20th year. It will be a major chunk of your outflow. So what entities do is every year or every month, whenever it is feasible, they will set aside a certain amount in investments. They will set aside a certain amount in investments. ये investment ही है. It is as simple as a fixed deposit also. It need not necessarily be high level investments like funds or private equity, whatever. It could be something as simple as a bank fixed deposit. But इसको ना, they wanted to give a different name. एक sophistication चाहिए था. So they call these as plan assets. They call these as plan assets. So at the 20th year, end of the 20th year, when this employee resigns, what are you going to do? Sell off the plan assets. You will get cash, and that cash you pay off the employee. तो इसको हम लोग बोलते हैं plan assets. Now these plan assets could be marketable securities, it could be fixed deposits, it could be recurring deposits, it could be equity shares, it could be bonds, debentures, anything and everything. Again, Ind AS 19 does not tell where you have to invest. So therefore, it could be anything. But what happens is these investments, these plan assets are ultimately going to fall under the definition of a financial asset. They are going to fall under the definition of a financial asset because it represents a right to receive cash whenever you require it. But if these are financial assets, if these are what you call investments, you have to do a fair valuation. So the manner of doing the fair valuation, the measurement is discussed under 113. How to calculate 113? But what do I disclose? That will go under Ind AS 19. So the disclosures go under Ind AS 19. Okay. Similarly, assets for which recoverable amount is fair value less cost of disposal, then the fair valuation will be done here, but you will be calculating that you will be doing the disclosures as per the standard on impairment. Okay. So this is what is the applicability and the non-applicability. So we did the objectives. Objective is to define what is fair value, to give the framework for measuring fair value in a single standard, and to give the disclosures that are there. Applicability, you could have two forms of applicability. When I talk about applicability, it is essentially the when fair value applies under the respective standards, but how to calculate, how to determine under this standard. Non-applicability could be divided into only disclosures not applicable or both measurement and disclosures not applicable. Okay. So this is the objective and scope of Ind AS 113. Okay. So this is a set of examples that you're having. So for example, what is going to be applicable is fair value less cost to sell as required under 109 for assets held for sale. So they are using the term fair value. So this fair value will go under Ind AS 113. How to calculate? Fair value through P&L or through other comprehensive income. This is your financial instruments. So sometimes you have to do the fair valuation of certain financial assets or liabilities. Okay, so FVTPL, FVTOCI, and that fair value will be determined again under Ind AS 113. Ind AS 113. Property, plant and equipment measured using the revaluation model. So when you are applying the revaluation model, you have to calculate the fair value. So therefore that also goes under Ind AS 113. And in the case of agriculture standard, that is Ind AS 41, biological assets measured at fair value. This again falls under Ind AS 113. So these are some of the applications of Ind AS 113 that you will be seeing in the standards that you study. Okay. Is it fine till now? Yes. All well. Tushar, Garg, Namrata, Uma confirmed. Yes. Asha, Syed, Nidhi, Shriram. All well so far? Yes. Any doubts? All well? Yes, please confirm. Okay, fine. Great. So now with this particular, what you can say, with this particular introductory sessions, we now come to the most important part of the standard. I will be spending the next 1 hour or so to discuss this definition. Okay, it's a beautiful definition and the most important part of this chapter. So my advice is just listen. Everything is there in writing. Yes, there won't be any difficulty, but this definition, you have to remember it for your lifetime, at least until the time you see another drastic change in the reporting regime. Okay, that is the level of importance this particular definition has. Okay, it's defined in para 9. You don't have to remember the para numbers. But if I look at the meaning of fair value, what is the meaning of fair value? The standard tells us that it is the price that would be received to sell an asset or paid to transfer a liability. Okay. In an orderly transaction between the market participants at the measurement date. So these are the key terms in this definition. First one, price. Second one, it is the price in an appropriate market, in a transaction, in an orderly transaction between the market participants at the measurement date. And the price is for what? The price that would be received to sell an asset or paid to transfer a liability. So now we come to analyzing each of the factors of this definition. So fair value definition. Okay. Now, the first thing that you have noted is price. It is the price. What type of price are they talking about? It is the price that would be received to sell an asset or paid to transfer a liability. Or paid to transfer a liability. So basically, look at the words: to sell an asset, to transfer a liability. That means the fair value definition is giving the guideline that you have to determine the fair value depending or with the thought process that you are parting away with the asset or you are parting away with the liability. तो इसको हम लोग बोलते हैं, it is nothing but an exit price. When you have to determine the fair value, you will have to look at it from the perspective of an exit price. Exit price means what? You have the asset. If you have to determine the fair value of the asset, you will think about it from the perspective that if I sell this asset, what am I going to get? If I sell this asset, what is the amount I could expect from a market participant? That is what you have to think of it. I'm not saying sell the asset actually, but the thought process, the picture that you will have is, if I sell this asset, मेरे को कितना पैसा मिलेगा? That is what we mean by exit price. Okay. Similarly, you would be very comfortable with understanding an asset, but sometimes what happens, the liability part appears to be a little tricky. You will sell a liability, or typically we do not use the word sell a liability. We will use the words transfer a liability. If you transfer a liability, that means you are not discharging the liability. See, when I talk about liability, there are two things. One is discharging the liability. The other is transferring the liability. Transferring the liability. They are two very different things. Okay. Suppose I have issued debentures. I have issued debentures to the market participants, okay, to the debenture holders in the market. Now, if I discharge this liability, that means what? I will pay the interest plus principal to the debenture holders. And once I pay the interest and principal to the debenture holders, all their claims are settled. All their claims are settled. Ultimately, what happens is, these debenture holders will not have anything left to claim from the company. Why? Because their liability is discharged. So in this case, what happens? At the end, the liability is, क्या बोलते हैं इसको? Extinguished. The liability is extinguished, or the liability is repaid, But suppose I am an entity which is performing very badly, and I go ahead for insolvency proceedings. So what happens is, the company's liability will now be managed by the resolution professional, who will identify the buyers for this company. And when they identify the buyers for this company, they will sell my assets to them and they will transfer the liability. So this debentures will now move from my head to the head of that entity who is buying the company. So therefore, in this case, is the liability discharged? Answer is no. Liability still exists. But by virtue of the acquisition through insolvency proceedings, the debenture holders of the former company will now get their dues from the acquiring company. So therefore, am I actually discharging the liability? Answer is no. I am only transferring it from myself to another company. And therefore, for that transfer, there will be certain payment that would be made. Okay. If I sell an asset, I get the money. If I transfer a liability, now that other person is going to bear the burden of discharging that liability. Since it was my liability, I will pay something to transfer the liability, and that something is what is the amount which will be paid to transfer a liability. Okay. So paid to transfer. Okay. So then later on, whatever he does is his job. But here, the important thing is liability not extinguished on transfer. Liability is not extinguished. मेरे सर पे जो liability था, मैंने उठा करके किसी और के सर पे डाल दिया. I shifted the burden from my head to somebody's head, but the burden still continues. Whereas in the case of discharging, the burden itself is gone out permanently because I have repaid the lenders. So that is what you mean by fair value definition, paid to transfer a liability. So when I talk about the price, it does not talk about discharging the liability. It talks about the amount that you could pay if you wanted to transfer this liability to somebody else. So when I talk about this, this is an exit price scenario. You will basically think from the perspective that I do not need these assets or these liabilities. तो मैं कितने में बेचूंगा, कितने में ट्रांसफर करूंगा? That is the question that you are going to ask. Okay. Now, with this understanding, let us just move forward in the definition. It is a transaction. It is a price that would be received if you sold the asset, paid if you transfer a liability in an orderly transaction between market participants. So the next leg is market participants. Who are my market participants? They could be any player in the market. They could be any player in the market. Okay. So now let us come to examples. Let us now come to examples. We now have two things. One is price and one is market participants. Okay. So suppose you have a plot of land. You have a plot of land. This plot could be used for residential purposes. That means you could construct flats, houses, okay? Or you could construct a commercial complex. You could construct a commercial complex. Or you could do farming on that land. You could do any of these things, okay? Now, you also know, I also know, land which is there only for farming purposes could fetch, let us assume, 10,000 per square meter. 10,000 per square meter. But the same land, if you are using to construct residential flats, bungalows, villas, whatever, then the same land will be available for, let us say, 85,000 per square meter. Whereas the same parcel of land, if you are going to use it for commercial constructions, then it would go up to say 2 lakhs per square meter. Just some figures for our understanding. Now, you tell me, each one of you, zara soch ke batao. This is the balance sheet of your company. I'm drawing a T-form balance sheet for simplicity. Okay. In this case, on the asset side, you are having plot of land appearing. Now, you had purchased it at some cost price. Okay. Now, this plot of land could be used for residential purposes or commercial purposes or farming or parking or, you know, non-agricultural, or just keep it idle. Kuch bhi kar sakte ho. You could do anything with that land. I have taken 3 instances so far. Now what I want you to tell is, if I ask you to determine the fair value of this land, remember, we discussed 2 definitions, 2 legs of the definition. It is an exit price for a transaction between market participants. So now, suppose you are the company A Limited. Okay. So now, if I tell you, determine the fair value of this plot of land, determine the fair value of this plot of land, you tell me what would be the proper fair value. You tell me what would be the proper fair value. Would it be 85,000 residential purposes? Would it be 2 lakhs commercial complex? Would it be 10,000 per square meter farming? What do you think should be the fair value? What do you think should be the fair value? And why? And why? And why? Come on. Janvi gave me an example, gave me her answer. Others, Namrata, Tushar, Panu, Asha, Sayyad. Yes. Come on. Tell me. It is an exit price for a transaction between market participants. Bas itne se hi think and tell me what should be the fair value. Should I treat it as a residential purpose or as a commercial complex purpose this land will be used, or for farming? Or do you think, sir, information is not sufficient? What do you think? Suppose these are the only three outcomes. Come on, tell me now. Go ahead. I'm waiting for your answers. What do you think? Do you think he should say that residential use only? Do you think they should say it should be only commercial, only residential? So yes, I am getting Asha gave me the answer. Lipika gave me the answer. Okay, let me make things little more complex or confusing. Okay, let me make things a little more complex, a little more confusing. Okay, A Limited is a company that deals with, that specializes only in farming activity. Only in farming activity. Now I want you to think and tell me what would be the fair value of this land. I want you to tell me, think and tell me what will be the fair value of this land. Okay. Go ahead. I'm waiting for your answers. I just ran into a small problem, but you can tell me the answers. Tell me. Okay, so now I got two answers. Lipika, Namrata, 10,000 per square meter should be the value. Okay, A Limited engages only in the farming activity. Okay. All right. Any other answers? Uma, Naveen, Asha, Viraj, Sayyad, Harita, 10,000. A set will be recorded at 10,000. Okay, it depends on the company's purpose to use the land. So here, since it is farming, it should be 10,000 per square meter. But I have another answer that tells us fair value will be of commercial complex only, since it refers to an exit price. Think from a business perspective. Think from the business perspective. A Limited engages in farming only as per my condition that I put. But what I want you to understand is, are you valuing the property thinking from your own perspective, or should you think from the perspective of an exit price? Socho, you have this parcel of land. On this land, the one who acquires it, that person can either do farming, or he can do a commercial activity, or he could do a residential activity. वो कुछ भी कर सकता है. He could do anything and everything under this. Now you tell me, I have made the facts more clear to you. This was confusing because everyone fell into the trap that you thought that since A Limited is doing only farming activity, fair value will be 10,000. Answer is, don't think like that. Think like, आपका asset देखो, your asset is capable of undergoing farming or residential or commercial. You have a limitation. You as an entity do only farming. But will the market participant have that limitation? Think about it and give me the answer now. All the people who gave the answer of 10,000 per square meters, you tell me whether it is logical for you to say that this parcel of land is worth 10,000 because I have done the activity of farming only, or should I say that मैं कुछ भी करूं, whatever I do is immaterial. This parcel of land can do, you can do commercial construction, residential or farming, कुछ भी कर सकते हो. The market participant can do anything. So now you tell me, what should be the fair value? Should it be 10,000 or should it now be 85,000 or should it now be 2 lakhs? Think from the perspective of a business person. Don't go into conservative mode. Don't go from the perception that यार मैं तो सिर्फ farming कर रहा हूं, so मेरे लिए तो value 10,000 होगा. Don't think from that perspective. Think from the perspective that you are giving away this asset to a market participant. And if you are giving away this asset to a market participant, you have to think from the perspective of the market participant. And because you have to think from the perspective of the market participant, you will have to understand that fair value 10,000 नहीं हो सकता है. Fair value is going to be 2 lakh rupees per square meter, because that is the worth of that asset which a market participant will see. Okay. So now coming back to this example once again. Suppose, now please pay attention. I'm just changing the facts. ध्यान से सुनो. So far, for this plot of land, I got only entities. I'm not selling it, but I received quotations only from entities carrying out farming activities, and they all agreed to 10,000 per square meter. See, I'm not selling it. I'm determining the fair value. तो मैंने जब पूछा market participants से, so all of them unfortunately were the ones who were dealing in the farming activity. Okay, जितने भी लोग थे quotation देने के लिए, they all were dealing in farming activity who came to me, who came to A Limited. Now you tell me what should be the fair value. Vivek is giving some answer. Yes. Vivek Srivastav. Yes. Shriram is saying fair value should be the highest, since even though A Limited's nature of business is only farming activity, it is not clear that they will use it. Okay. All right. Now I just changed the facts. It's not A Limited that I'm talking about. It is the counterparties who are coming for the land. All of them are dealing only in the farming activity. I'm still getting some answers with 10,000, but some are saying 2 lakh rupees. So my point is, look at the fact of your, look at the facts of the case. आपके पास क्या है? Sir, मेरे पास land है. You got price quotations from people who are dealing in farming activity. That does not mean they will continue only farming. Tomorrow, they can do commercial construction also on that. The asset characteristic is what you have to look at. You will not look at the market participants characteristics. खरीदने वाला कुछ भी करे, खरीदने वाला बोलेगा, sir, neither will I do farming, nor will I do residential, nor will I do commercial. I will only go and sleep on this land. It is not fetching me anything. So the fair value of this land should be 0, and therefore you transfer the land free of cost to me. Will you, as the owner of the property, transfer it at no cost to him? Answer is no. You will tell him, "Arey bhai, tu kuch bhi kar le. You can either sit idle, do farming, do residential, do commercial, do whatever you want. My asset, uspe the maximum benefit that you can avail is by treating it as a commercial complex. By you opting to choose idle, to remain idle, that is your problem. That should not affect the worth of the asset which I am having with me. And therefore, I cannot transfer the land free to you just because you are sitting idle. कल को उठ के तुमने construction complex बनाया, you made a commercial complex, then you will get it at 2 lakh per square meter. Then तो नुकसान तो मेरा हो गया ना, that I gave it to you free of cost. You will have to imagine the fair value from the perspective, the features, the characteristics, the disadvantages of the asset only, and do not look at the features, characteristics of the entity who is going to buy or sell that asset. Those are entity specific characteristics. Suppose somebody comes who has only the permit for constructing residential complex. If that person has the permit for constructing only residential complexes, you cannot say that this land will be used for residential complex only. Are kal ko ut ke he can take a license for building commercial buildings. If that is the case, on this land, he will obviously build commercial property. So will you determine the selling price of your asset based on who the buyer is? Or will you determine the selling price based on what are the features of the asset? Obviously, you will determine the fair value based on what are the characteristics of that asset, not on the basis of the market participants. Let us assume that I will go one step further. This is a plot of land which is situated in a locality like Gurgaon in DLF Cyber City, or you can take it as this is a parcel of land which is situated in an area such as Juhu, for example, which is a sea facing plot of land. Now, if this is the case, this parcel of land will be infinitely more costly than 2 lakh rupees per square meter, because this is in a location that is in great public demand. And since it is in great public demand, you will do the pricing based on the features of your asset and not on the basis of who the market participant is, and not even on the basis of what you as the owner of the end of the asset are. It does not talk about you and your features. It does not talk about the market participants' features. It only talks about what are the features, what are the characteristics of the asset based on which the value can be determined. Is it okay? Yes, exactly my point. If there is a chance of parting with the asset at 2 lakh rupees, why would you as a prudent businessman part it for a value lower than 2 lakhs? It does not make any sense at all. It does not make any sense at all. So, sir, does it mean that whatever be the purpose for which the land is acquired, fair value will be taken as the highest value proposed, that is higher of all? Absolutely right. See, think from a business rationale. You have an asset. Why do you have an asset? Sir, to get economic benefit out of it. So, will you choose to part away with that asset by accepting a lower economic benefit than what it actually is worth? Answer is no. जितना मेरे asset का earning capacity है, worth है, value है, I will obviously try to extract the maximum value from that asset. And that is why you will look at this asset from the perspective of what are the features of this asset. आप ये कभी नहीं सोचोगे दैट द मार्केट पार्टिसिपेंट क्या कर रहा है. Who is a market participant? He could be any XYZ player in the market. I'm not even bothered about. But what I have to think about is what I'm selling has these features. And if it has these features, the price of this land should be so much. And that is when it will fetch a particular price. So your fair value will be dependent exactly on what? It will be dependent exactly on the features of the asset and not on the basis of the buyers or sellers and their limitations. I'm not really going to be bothered with that. Is it okay? Nidhi, Panu, is it clear? Naveen, is it okay? We are not going to see what is the intention of the company acquiring it. No. वो कुछ भी कर ले, we are not going to be concerned. Okay. We are not going to be concerned. What I am doing, I am not going to be concerned. I have to look at मेरा asset का क्या value है. What is the value of this asset? And that is what will lead to determining the fair value. Sayyad has confirmed. Shriram, is it okay? Yes. Namrata has confirmed. Janvi always gave the right answer. Asha, did you follow? Uma, did you follow? Do not look at who is the buyer. Do not look at who is the seller. You will be looking at what? You will be looking at what is the asset that you are dealing with. What is the liability that you are transferring? The features of the asset is what matters when you do the valuation. Okay. Now let me go ahead and I will modify the question. Now you give me the answer. I think now you should be in a position to give me the right answer. Okay, you should now be in a position to give me the right answer. Suppose this land has plot of land usable only for agricultural purposes. Usable only for agricultural purposes. That means what? You would have received the permissions to only carry out agricultural activities on this land. This land is demarcated by the government. The government has said, इस land पे खाली agricultural activities हो सकता है. It is what we call an agricultural land. And therefore, on this agricultural land, residential construction is not allowed. Commercial construction is not allowed. Nothing is allowed on this. Now, let us assume that, okay, so this is now the condition of the land. Now, please pay attention. Rahejas, who are huge builders, they come to A Limited and then they say, look, you have this parcel of land, you give it to us. Okay. Now, we want to construct a commercial complex upon it. Please be careful. Understand that this is the condition of the land which is now there. Okay. Rahejas will say, we want to build a commercial complex on this. So sell us this land. Now you tell me, sir, सोच समझ के बात करना. Okay. Will you now say that you are not selling the land, but now you have to determine the fair value? Rahejas have come, they made their intention clear. Now I want you to tell me, you will not sell this land, but if you have to determine the fair value of this land, will it be 10,000, considering the fact that this land is usable only for agricultural purposes, or will it be rupees 2 lakhs, considering the fact that Rahejas have come to you with the intention of building a commercial complex on this land? What do you think will be the fair value? Will it be 10,000 or will it be 2 lakhs? What do you think? सोच समझकर जवाब दो. The land is usable only for agricultural purposes right now, and the government has given the permission only for agricultural purposes and no other activity. And Rahejas have come and they want to build a commercial complex. That is the offer which is there to you. Now think about it and answer. Okay, so Naveen, Harita, Janvi, Namrata. What about the others? Nidhi, Asha, Uma, Panu, Shriram, Sayyad, Vivek, Tushar. Come on, guys, give me the answer, everyone. Yes. So now, because land is usable only for agricultural purposes, Lipika also is saying 10,000 only because of the condition that is there on the land. Sriram is also saying fair value is 10,000 only because it is based on the features of the land and not on the intention of the buyer. Absolutely right. Tushar is saying we will consider 10,000, but we will take payment of 2 lakhs. अरे यार ऐसा कैसे हो सकता है? Do you think Rahejas will pay you 2 lakh rupees for a land which is usable only for agricultural purposes? Answer is no. Rahejas will say, beta, what I'm buying from you today is farming land, agricultural land. If I have to build a commercial complex on that, I have to first go and apply for permission with the government. And the government will take some charges, which will be huge charges for the conversion, for the zoning of this land, to convert the zoning from agricultural to a non-agricultural land. And that zoning charges will be huge. So why do you think Raheja will pay you 2 lakh per square meter? Raheja knows that it can get the conversion done by applying for permissions with the government, and therefore it wants to buy the farmland from you. That is Raheja's own activity. That is their own set of intentions. We cannot consider their intentions and do the pricing at 2 lakh per square meter. I have to look at my asset. This asset is coming with a limitation. The limitation is that it is pure agricultural land with no license to build residential or commercial complexes. So therefore, anybody who comes cannot offer you more than the rate of 10,000 per square meter, and 10,000 per square meter alone is going to be the fair value of this land, regardless of what is the intention of the buyer, regardless of what is the intention of the buyer. So as the government restricted, Uma, the government has restricted this use of this land, but if I need 2 lakhs, I have to apply for a zoning. I have to apply for a rezoning of this land. That means A Limited has to spend the money and get a license to convert the agricultural land into a non-agricultural land. And if I have to do this conversion, I also have to pay the government some license fees. Yes, so you can explore. But what you are doing is, by thinking of doing that, you are altering the condition of the land. You are altering the characteristic of the land, whereas I am interested in as is basis. आज के तारीख में बिना कोई चेंज के लैंड का वैल्यू कितना है? The worth of the land today without any changes affected is going to be 10,000 per square meter. सोचने के लिए तो मैं कुछ भी सोच सकता हूं. मेरा लैंड है. I can think of saying that मैं अपने लैंड पे रॉकेट लॉन्च स्टेशन बनाऊंगा. Is it practical? Is it feasible? Not necessarily. Not necessarily. See, Rahejas, let them do commercial activities. It is their intention. You have to look at the land that you are having and what is the feature of that land. What is the characteristic of that land? That land is a pure agricultural land in our example. And therefore, the fair value cannot be more than 10,000 per square meter. The fair value cannot be more. वो कुछ भी कर ले. They may take government permission and do a rezoning. that becomes entity specific. That becomes entity specific activity which we are not interested in. Sir, वो बिना permission के भी बना सकते हैं. Hypothetically, if they build it, it is again their lookout. Why should I be worried? Tomorrow government comes to know, it will either collect a huge fine or it will ask a demolition of the buildings. So that is their lookout, not my lookout, not my assets lookout. I am selling an asset which is a plot of land on which only farming activity is permitted. So I am having an asset with a limitation, and therefore मैं कुछ नहीं कर सकता. I cannot even think that इस पे commercial भी हो सकता है, but you need to do the rezoning of that. So don't alter the nature of the asset. When you are doing a fair valuation of an asset or a liability, think about it from the perspective of the asset or liability on an as-is basis. Means today's date, what is the worth of this asset as it is. Don't go to the future and think, I can do a rezoning. No, for doing, you can do anything X, Y, and Z, but there is no limit to that imagination. So you will have to think that I have this parcel of land. It is now having the feature of only agricultural activity being permissible. So that becomes a limitation, and that limitation is a limitation of the asset that you are having. And because of that limitation, the fair value of your asset will be 10,000 per square meter. Let me move one step further. I have acquired this. I am the builder who can do even commercial construction on this. Yes, I have the licenses for carrying out the activity, but this land is a green zone, is an agricultural zone. And therefore, though I am a builder having licenses to construct shops, commercial complexes, malls, theaters, etc., I cannot say that this land is worth 2 lakhs because me having the ability to construct is entity specific, but your asset specific feature makes it a farmland, and therefore the fair value continues to remain at 10,000 per square meter. Okay, is it okay? Yes, all clear, everyone? Nidhi confirmed. I think most of you guys have understood. Yes, absolutely. So Shriram also confirmed, Nidhi confirmed, Sayyad all clear. Yes, Vivek okay, Uma okay. Good. We are having Tushar is okay with the discussion. KR Pavni, is it okay? Yes, Asha, Mukesh, Naveen, Harita, all well, good to go. Yes. Okay, Lipika, Panu, everybody gave their clearance. Okay, so now let us move on to the next part. Okay, let us then move on to the next part. Okay. I will just move to something known as value in use. I will just move on to something known as value in use. Okay. Value in use is a term that is used in Ind AS 36. In Ind AS 36 that deals with impairment. Okay. When I talk about impairment, in impairment, all of you would kind of be aware that impairment, basically we compare the book value with the recoverable value. So recoverable value is higher of fair value less cost to sell and value in use. This is the value in use. Okay. So what is this value in use? Sir, this value in use is nothing but present value of future cash flows. You would have studied this. Okay. Present value of future cash flows. Suna to rahega. Okay. You would have heard this. Now, this particular PV of future cash flows. That means what? I talk about this plot of land only. I talk about this plot of land. You are having this plot of land. इस land पे, suppose we come back to the original example, I can construct, I can build residential complexes, I can do farming, I can do anything. So now you look at, A Limited will look at its own feasibility. कि भैया वो क्या कर रहा है? If A Limited is having only the license, experience, exposure of constructing residential complexes, then A Limited will determine what are the future cash flows it can get from the residential complexes construction, and it will factor those cash flows into this working to determine the value in use. Because value in use is an entity specific value. This is Ind AS 36. Okay. This is an entity specific value. And because it is an entity specific value, this is based on my estimate of what are the future cash flows I am going to derive from the use of this asset. And based on that, I determine the value in use. So value in use cannot be market specific. Value in use is always entity specific. And when it is entity specific, तब तो बात ही नहीं करेंगे ना. It is not going to come in the fair value chapter itself. Why? Because fair value of assets or liabilities is always from the perspective of the respective asset and liabilities, features and characteristics. It does not talk about entity specific restrictions, entity specific conditions. It talks about only asset or liability specific restrictions. And therefore, value in use cannot be included under Ind AS 113 because this becomes an entity specific value. Whereas if I talk about the second leg of the definition, that is fair value less cost to sell, that point of time, this one is going to be asset specific. Asset specific. And that is why the measurement of this fair value is going to be covered under Ind AS 113. So if you look at the applicability of Ind AS 113, you can see here value in use in Ind AS 36. This is not applicable for measurement as well as disclosure. Why not applicable for measurement? Because this value in use is entity specific. This is entity specific. Whereas in this case, fair value less cost to sell, you can see that only disclosures are not applicable. That means measurement is applicable. That means what? Fair value less cost of disposal under Ind AS 36. If you are going to calculate this calculation, this measurement will be in accordance with the principles of Ind AS 113. I was hoping that some of you would ask a question that Ind AS 36 दोनों में क्यों आ रहा है? But probably you would not be able to recollect value in use. So that is why I also let go. Okay. So therefore, value in use becomes an entity specific value. So you will refer the calculations as per the process outlined in Ind AS 36. But fair value less cost to sell, the process is not determined in Ind AS 36. You will have to refer to Ind AS 113 for this. Is it okay? Is it clear, everyone? Yes. Yes. Any doubts? Any doubts so far? Bolo. Okay, this is not clear. Okay, see. This is anyways not a part of 113, but anyways, you have land. This land you will be testing for impairment. Every asset has to be tested for impairment. So impairment में क्या होता है? You compare book value with the recoverable value. You will be having two values. You will be having two values. Okay. Now, what do you mean by book value? Book value is basically the value appearing in your books. So that is clear. इसमें कोई doubt नहीं है. Recoverable value is higher of two things: value in use and fair value less cost to sell. It is having two components which you have to measure: value in use and fair value less cost to sell. So when I determine the value in use, what does it mean? Suppose A Limited continues to use this land. It will get certain economic benefits. You remember capital budgeting, you used to do present value calculations to arrive at net present value. So here also you will be required to do something similar. Up to the end of the life of this land, you will proceed and calculate what will be the present value of the future cash flows. So when I talk about future cash flows, who will get these cash flows? Sir, who will get right now? If I have to determine, it is A Limited that will get the cash flows. So A Limited, I am preparing balance sheet. I am calculating my value in use. That means I will determine what are the activities I will carry on this parcel of land. And since I am calculating the cash flows that will arise from my activity on this land, this value in use becomes an entity specific value. Is it okay now? This value in use becomes an entity specific value. मैं क्या कर रहा हूं? What am I doing on this land? What activity I'm doing? What is the cash I will generate with the activity that I do? Everywhere it is I. So that is what we call as value in use. मैं क्या कर रहा हूं? That is what is important when I determine the value in use. So this becomes an entity specific value. And since it is an entity specific value, what is the definition of fair value? Please understand what is the definition. Fair value is a price to sell an asset between market participants. You look at the transaction with market participants, not entity specific characteristics, not entity specific features. You will look at only asset specific features, whereas value in use is entity specific. ये मेरा cash flows है, my discounting rate. So therefore it is entity specific, and therefore this cannot go under Ind AS 113 measurement also. And that is why if you look at non-applicability, both measurement as well as disclosure, it is not applicable. Why? Because it is an entity specific value. You can see this value in use. Yes, but the second part of recoverable value, that is fair value less cost to sell. That means what? Suppose I don't intend to use this land. If I intend to sell this land, what am I going to get? For that, we determine something known as fair value less cost to sell. This part is not entity specific. This is asset specific. जब आप asset बेच रहे हो, when the only cash flow you are getting is from sale of this asset, it is on the basis of assets characteristics, on the basis of assets features, and therefore this fair value is not entity specific. This is based on asset specific features, and therefore this portion is covered under Ind AS 113. So you can see here, non-applicability, only disclosures are of 113 are not applicable. That means what? Measurement is applicable. Measurement is applicable. And when measurement is applicable, it means what? It means that the determination of fair value less cost of disposal, that measurement is based on Ind AS 113 principles. Disclosures is out of Ind AS 36. Is it okay now? Yes. Is it clear, everyone? Lipika, did you follow? And Shriram, did you follow? Recoverable value is higher of value in use and fair value less cost to sell. And that we will be comparing it with book value. If book value is high, recoverable value is less, you don't have to do anything. But if book value is high, recoverable value is less, you will have to write off the asset and bring it to the recoverable value. If recoverable value is high, book value is lower, you don't have to do anything. Shriram, did you follow? Yes. I was talking from the perspective of recoverable value only. Okay. So that part even you will come to know when you do Ind AS 36. Okay, Namrata has confirmed. Nidhi, is it clear? Sayyad, is it clear? Panu, is it clear? Pavni, Asha, Mukesh, Naveen. Mukesh has confirmed. Yes. Okay. Shriram, your confirmation only. Okay. All right. Fine. Good going. Please, it's good to see so many students who are attending the session. Okay, I understand that it's going to clash with your office a little bit, but please maintain the momentum. Okay. Yes. Shriram, okay, all is cleared. Okay, fine. So with this, let us move on to the next part. Okay, let us move on to the next part. It is the price in an orderly transaction. What is an orderly transaction? Very simple. I don't have to explain much in this. Price in an orderly transaction. Orderly transaction means, sir, transaction should be in order. Transaction should be in order. That means what? It means that transaction between unrelated parties who have all available information and without any distress. Okay. All right. Okay. So orderly transaction essentially means it is a transaction between unrelated parties. Yes. Who have all the available information. That means the buyer is also fully aware. The seller is also fully aware of all the facts, conditions, nature of the asset or liability in question, and the sale or transfer is happening without any distress. That means both the parties are financially sound. There is no need for any immediate sale or purchase. So when these are the things, when everything is goody-goody on both sides, that we call as an orderly transaction. So it is a transaction. It is a price at which you can sell an asset or transfer a liability in an orderly transaction, between market participants, okay. And since it is between the market participants, the question arises, who are market participants? Market participants could be any players in the market. It could be any player in the market, X, Y, Z, I'm not worried about. But when I talk about fair value, it will always be from the perspective of the market participant, and then we move on to the definition. Again. In an appropriate market. The next important definition is, what is an appropriate market? So price we saw, orderly transaction we saw, market participants we saw, and then we move on to measurement date. What measurement date? At which date you are measuring the fair value? Very simple. Okay. Are you measuring as on 31st March, 30th June, 30th September, any day in between? Whatever is that date, that is known as your measurement date. Okay. All right. Sriram has a question. In case of entity specific value, is the land valued based on the purpose for which the purchasing entity purchases the land? No, not at all. You will never do the valuation, the fair valuation, based on the purpose for which the entity procures the asset. That becomes an entity specific characteristic. Let me take another example for you. Okay. Since you have brought this topic, let me take another example for you. Okay. TCS. Fair value. Market price is rupees 2,800. For example, market price is 2,800, for example. And all of us are may be aware of something known as bulk deals. So let us assume that in a bulk deal transaction, you have hypothetically Google buying 15 lakh shares at rupees 2,700 per share. This is on the same date, same time. Okay. When the market price was 2,800, Google purchased 15 lakh shares at 2,700. Okay. So there is a 100 rupees discount. You are an entity who is holding TCS shares. You are holding 100 shares of TCS in your financial statements. Now I want you to tell me, all of you for that matter, what do you think will be the fair value of this transaction? Will it be 2,800, the price which is quoted on the market? Or will it be 2,700, the price which is based on the bulk deal that Google entered into for buying 15 lakh shares at 2,700? What do you think will be the fair value? Will it be 2,800 or will it be 2,700? And once you give me this answer, I can better answer Sriram's question. Okay. So you should be in a position to tell me this answer. Janvi, Asha, Uma, everybody gave one answer only. Others, Naveen, Pavni, Nidhi, Mukesh, Syed, Lipika, Namrata, Sriram, Vivek, Harita, Tushar, Viraj. Go ahead, tell me what will be the fair value. Will it be 2,800, 2,700? Good. Answers are flowing in. You guys are able to follow. Everybody is giving the same answer. Shriram, what do you think should be the fair value? Should it be 2,800, 2,700? What should be the fair value? Come on. You give me that answer and your question will be correct. You will be able to understand your question. Okay. Come on. Tell me. Yes, Pavni gave the answer. Vivek gave. Mukesh also gave. Yes. Quite a number of you have given. Okay. No. In this case, you cannot do the fair valuation based on this transaction. This is a one-off transaction. Google has purchased 15 lakh shares, which is not something gadi koi kharidta hai. See, Google got a 100 rupee discount per share because it is buying 15 lakh shares bulk from the market. वो shares उठा रहा है market से. क्यों उठा रहा है? Probably it wants to make a strategic investment. I do not know. But one thing is sure, if 15 lakh shares would translate roughly 2 to 3% stake, it means it is going to acquire some stake or it may have certain strategic interests in the entity. So 15 lakh shares into 2,700 bhi aap karoge, that comes to crores of rupees. That value comes to crores of rupees, which is not a normal transaction. And therefore, this becomes an entity specific transaction. Entity specific transaction, entity specific value. 2,700 is an entity specific value which is given only to Google because it is entering into a bulk transaction, and therefore this cannot be the basis for determining the fair value. Don't go into conservatism. Ind AS never focuses on conservatism. Ind AS focuses on realistic. Be realistic. We come from a background where we are taught to be conservative. हम accounts पहला वर्ड सीखने से हम लोग स्टार्ट करते हैं कंजर्वेटिव रहो. ये इतने तक कि हम एग्जाम लिख कर भी आते हैं तो हम कंजर्वेटिवली बोलते हैं पेपर ठीक ठाक था. None of us will say पेपर बहुत अच्छा था, पेपर was awesome, I wrote all the answers. Nobody will say, because कोई गारंटी नहीं है. We are very conservative in that. Don't be conservative as far as accounting is concerned. Be realistic. The shares that you have will fetch 2,800 in the market. Suppose you place an order on, suppose you go and on the exchange you say, I want to sell 100 shares of TCS. Do you think you will get 2,700? Answer is no. Yours is not a bulk value at all. So therefore, you will get 2,800 only. Sir, but 2,700, that was a bulk quantity, an entity specific value. And that entity specific value can never be considered for the purposes of doing the valuation. So in our example of land also, you will never have entity specific conditions, entity specific what you can say restrictions, entity specific information essential for doing the valuation of shares. Kabhi nahi hoga. You will always consider the asset specific values. Today the shares of TCS are traded at 2,800. The value in your books of the TCS share should appear at 2,800 and not 2,700. 2,700 entity specific value, usko don't even consider that. Okay. Suppose you enter into a transaction for extra discount, then that becomes an entity specific transaction. Why? Because that is probably dependent on the persuasion skills of the buyer. So that cannot be the basis for determining the fair value of your asset. Is it okay? Yes. So entity specific values will never come. Okay. Entity specific value. Never. never be included. Okay. So Sriram, is that clear? When I'm determining the fair value, it is always based on asset. So that takes care of Sriram's question. No other doubts. All clear. Okay. So now coming to the last part of the definition on fair value, that is appropriate market. That is appropriate market. Do we discuss it now, or do you guys need a break? Do you discuss it now, or do you guys need a break? Do you want to discuss this now or a break? Come on, tell me. Fast, fast, fast. Okay. I need more answers. One student has answered. What about the others? Okay. It's 1:2. Two are saying now. One is saying break. Okay. Two break. Two now. Yes. Okay. Break. Break. Okay, fine. We take a 5-minute break. It's 8:45 now. So we will resume it in 5 to 10 minutes, somewhere in that gap. Okay. We take a break now and we come refreshed and discuss appropriate market today. So that should take care of our fair value definitions. Then in the next class, we'll be solving the problems. Okay. So we take a break, 5-minute break now. Okay. All right. Fine. Thank you. See you in 5 minutes. Okay. Are we live? Okay, fine. Yes. All right. So welcome back, everyone. So we now proceed with the last part of the definition, that is appropriate market. All right. Now see, let me just, before starting this discussion, I will ask you 2 to 3 questions. You may be able to give the answer. You may not be able to give the answer, which is fine. But that should be the basis for determining why this particular topic is important. Okay. TCS shares, BSE, NSE, 2,800 rupees, 2,799.95 rupees. These are the quoted prices. Okay. Then let us again take another example. Atta, wheat flour, domestic market, rupees, not 100, this comes to, I think, say rupees 50 per kg, rupees 75 per kg. Okay. So now, suppose I have to do a fair valuation of these items. Okay. You tell me now, what should be the fair value in your opinion? Should it be for the TCS 2,800 or 2,799.95? You should be aware that BSE, NSE, there is a small difference in pricing. Okay. 2 paise, 3 paise, 5 paise. Don't say it is immaterial, sir. कुछ भी कर लो, rounding off में हो जाएगा, because हम सब articled assistants हैं and materiality अपने को मालूम है. I'm not talking about materiality right now. Okay. Domestic market, the wheat flour is saleable for 50 rupees per kg. Export, it is at rupees 75 per kg. So now what I want you to tell me is, what will be the fair value in these cases? What will be the fair value in these cases? Come on, tell me. Okay, so I'm getting answers that it will be 2,850 respectively. Others? Yes. Others? Tell me. Anybody else? Or if you are stuck, tell me where you are stuck. See, as I said, some of you may be able to give the answers. Some of you may not be able to, which is fine. But if you are unable to tell me the answers, I need to know what is troubling you. Okay. See, these are the quoted prices. TCS share on the BSE is at 2,800 and NSE is at 2,799.95. Wheat flour, domestic market, it is 50 rupees per kg. Export, it is 75 rupees per kg. So I have to just determine what is the fair value. Which value will you take? Will you take BSE? Will you take NSE? Will you take domestic? Will you take export? Namrata, just simple. I have not explained anything. I am just asking, what should be the fair value in your opinion? What should be the fair value of TCS share? The TCS share on the Bombay Stock Exchange is quoting at 2,800. Yes. Namrata is saying, I am not able to understand which one we should consider. Yes. Which is exactly the problem Everybody should have. I cannot say 2,800, 2,799, 50 or 75 directly. That is where the concept of appropriate market steps in. Okay. See, each of these commodities, financial assets, financial liabilities, in sabke liye there are defined marketplaces. See, when I talk about fair value, it is the price to sell an asset or paid to transfer a liability. So sell an asset means what? You will go to a marketplace to sell an asset. You will go to the marketplace to sell an asset. The problem is, sir, कौन सा marketplace जाओगे? If I have to talk about wheat flour, मैं कौन से marketplace में जाऊंगा? Will I go to the one that is closest to my neighborhood? Should I go to the APMC market, which is there in places like Delhi? Should I go to the horticultural department, which is managed by the state government in some of the states? कहाँ जाऊंगा मैं? Where do I go? Because each thing will be an appropriate market. There are various marketplaces. Okay. Shares. You have Bombay Stock Exchange, you have National Stock Exchange, you have Ahmedabad Stock Exchange, you have Cochin Stock Exchange. Which stock exchange value will you consider for the purpose of determining the fair value? And that is when we have to understand कि भाई what is the appropriate market you have to consider. What is the appropriate market you have to consider? Okay. So now when I talk about appropriate market, it is divided into two types. First one is principal market. And second one is most advantageous market. These are the two places, the two marketplaces defined under Ind AS 113. Okay. If the commodity you are dealing with has a principal market, if the commodity you are dealing with has a principal market, don't look at this. Don't look at the most advantageous market. वो देखने का ही नहीं है अपने को. Principal market है, you stick to the price in the principal market and that will take care of the fair value. If there is no principal market, if this is not there, only then you will look at the most advantageous market. Okay. So this is how the things are. मतलब अपने को मालूम तो पड़ गया कि हम कौन सा market देखेंगे. Right now, I don't know what each market means, but principal market, if it is available, you will stick to the price of your asset or liability in that principal market. If there is no principal market, out of the multiple marketplaces which are available, you will determine which one is the most advantageous market. Okay. Sir, वो सब तो ठीक है. हमें समझाइए कि principal market क्या होता है. Very simple. Principal market वो होता है जिसमें you have maximum number of buyers, maximum number of sellers, maximum number of transactions of the said asset or liability. Okay, of the said liability or asset. Okay, so this is what we look at as the principal market. For a particular commodity, for a particular asset, for a particular liability, you have maximum number of buyers, maximum number of sellers, maximum number of transactions in the said asset or said liability. Sir, what does it mean? याद करो, बहुत साल पहले, many years ago, you had studied something known as perfect competition. You remember perfect competition? You remember perfect competition in economics? Are yes or no? Sir, what is perfect competition? Sir, perfect competition means it is a scenario where you have highest number of buyers, sellers, and transactions such that no single buyer or seller can influence the market price. Can influence the market price. Do you remember perfect competition? And this was said to be the most efficient form of marketplace. Why? Because the seller also gets his or her dues and the buyer also gets his or her price at which it expects to procure the goods. So this ko hum log bolte hain perfect competition. So what happens in a perfect competition is no single buyer or seller can influence the market price. In a day, you have multiple number of bulk deals which happen. Okay. But none of these bulk deals on the BSE or the NSE have the capability to affect the pricing for the retail investor. नहीं होता है वो. Retail investor का अपना ही चलता रहता है. Whereas bulk buyers will have their own pricing. Even the bulk buyers as such cannot influence the retail investors price because the sentiment in the retail investors is totally different from that of the bulk buyers and sellers. And therefore, this becomes a recipe for a perfect competition. Why do I say this is perfect? Because when there are highest number of buyers and sellers for a particular transaction, it implies that buyers are also knowledgeable, sellers are also knowledgeable, and therefore, whatever be the variation initially in the price, ultimately they will all sit and converge at some soon point of time towards what is known as the fair value. At that particular price point, buyers are also happy, sellers are also happy, because that is the value of the asset or liability that you would be transacting in. And therefore, you will be considering the principal market's price for the purpose of determining the fair value. Okay. The more the number of transactions, the likelihood of attaining the fair value is very, very high. The likelihood of attaining the fair value is very, very high because you will be reaching the price that is considered fair by both the buyers as well as the sellers. Is it okay? Have you understood the principal market? Yes. Have you understood what is the principal market? Yes. So we are achieving perfect competition in such a marketplace where the transaction is between market participants. The transaction is based on knowledgeable buyers and sellers, and the transactions flow through without influence of any single buyer or seller. And that is what ultimately means my fair value. So when there is a principal market, uska price jo hai, the price of that particular asset or liability in that market becomes your fair value. That becomes your fair value. Okay. So therefore, if I come to TCS case, let us assume, where are the maximum transactions? If it is in NSE, go ahead, 2,799.95 will be your fair value. If it is BSE, 2,800. Again, I'm telling, there is no guidance. Sir, because what happens, sometimes people will ask such questions like, sir, यहाँ पे 51% है, यहाँ पे 49% of the transactions है, तो कौन सा लेने का? Sir, यहाँ पे 50.1% है, here 49.9% है. Please don't waste time in all this. Okay. आपके पास इतना टाइम है ढूंढने के लिए 50.1, 49.9, तो आप 50.1 लेके चल सकते हो. But what is important is identifying the marketplace. Ultimately, when you prepare the financials, okay, you will ultimately check materiality at that point of time as well. And these are not at all material. कौन सा भी ले लो कोई फर्क नहीं पड़ता. Nobody is going to question this, okay, because it's very difficult to identify. But ultimately, if you have a broad understanding of which becomes your principal market, we will be in a position to determine the fair value correctly. Okay, so identify. The standard does not tell more than 50% इसमें होना चाहिए, 50.1 होना चाहिए, 50.01 होना चाहिए. That guidance is not given anywhere. It just talks about highest number of buyers, highest number of sellers, highest number of transactions of the said asset or liability will go ahead and give you your what you can say, will go ahead and give you the what you can say, the fair value. Is it okay? Yes. Is it fine? So don't ever ask these kind of questions. आपके एग्जाम में भी दिया रहेगा what is the principal market, what is the most advantageous market. So stick to that only. Okay, so sir, will the market differ depending on whether one is the buyer or one is the seller? Obviously no. Again, I'm telling, don't go into entity specific. The market will depend only on the commodity, on the asset, on the liability, what you're talking about. Okay, so therefore, if it is a share, वो चाहे buyer हो चाहे seller हो, that share is going to be traded on the stock exchange. So therefore, that particular stock exchange becomes your market. So the deciding factor as far as the marketplace is concerned will be dependent on the commodity, on the asset, on the liability, and not on the buyer or the seller. This will become more clear when we talk about the most advantageous market. When we talk about the most advantageous market. Is principal market clear to everyone? Is principal market clear to everyone? Yes. Any doubts in the principal market? Any doubts? Any doubts in the principal market? Shriram, Panu, Namrata? All clear? Okay, fine. All right. Now you come to the most advantageous market. Now you come to the most advantageous market. Okay. And let us understand this. So I'll just continue on the next page. Most advantageous market. Okay. If there is no principal market, then you look at the most advantageous market. Then you look at the most advantageous market. ठीक है. तो हम बात करते हैं wheat flour or mangoes or whatever it is. Now, when I talk about domestic market, these could be sold in a marketplace. It could be sold in a departmental store. It could be sold in a mall like Reliance, Consumer Goods. It could be sold wherever. I mean, it depends. It could be sold through government outlets. Okay. So you have multiple markets. And when you have multiple markets, each of these markets have their own number of buyers and sellers. Their own number of buyers and sellers. So therefore, it becomes very difficult to identify which is the principal market, which is the principal market. Typically, when you have exchanges like the stock exchange, commodity exchange, then these exchanges would be the principal markets because there is no problem of identifying a buyer and a seller, etc. You just come, list your goods on the exchange, list your shares on the exchange, and somebody will buy, somebody will sell with the exchange taking care of the settlement. So therefore, when you have an exchange, that point of time, there won't be any problem with the principal market. But when the transactions, the goods are of a nature that there is no exchange for that, then it becomes difficult to identify which is the principal market. Okay. And when it becomes difficult to identify which is the principal market, or there is no principal market, because every market may there are comparable number of transactions. So when that is the case, the standard tells, don't break your head. You go ahead to the most advantageous market. You go to the most advantageous market. Okay. So now when I talk about most advantageous market, what does it mean? It means the market where proceeds are highest. The market where the proceeds are highest. Okay. So what do you mean by proceeds? Okay. So now coming back to that example of ours where I have domestic and export. I have taken two simple examples. Okay. Wheat flour. The domestic market is giving you 50 rupees per kg. Whereas the export market is giving you 75 rupees per kg. So this is the price that is quoted. This is the price that is quoted. But now let us think. ये तो price है for the goods. But to ensure that the goods enter the market, you will be incurring some costs. To ensure the goods enter the marketplace, you will include it in the, you will have to spend that amount. Yes, you have manufactured the wheat flour in your premises, in your godown, in your shop. वो जहां कहीं भी हो, your goods are there. Your asset is there. If you have to sell it in the marketplace, you have to alter the location of your assets. Am I right? आपको एसेट को फिजिकली ले जाना पड़ेगा मार्केट प्लेस में, तो उसको हम लोग क्या बोलते हैं? वी कॉल दैट एज द ट्रांसपोर्टेशन कॉस्ट. वी कॉल दैट एज द ट्रांसपोर्टेशन कॉस्ट. दैट मीन्स सपोज इन द डोमेस्टिक मार्केट you will be spending 5 rupees per kg for transport. Most advantageous to the one who is holding the asset, of course, to the one who wants to transfer the liability. You are preparing, you are determining the fair value in the books of the entity who owns the asset or liability. अरे किसी और के asset और liability मैं अपने book में fair value नहीं कर सकता. I cannot do the fair valuation of the plot of land held by TCS because वो मेरा है ही नहीं. I will do fair valuation of my plot of land. Yes or no? So most advantageous to the entity whose valuation you are going to do. So we will look at that price which maximizes my proceeds. And when I talk about proceeds, it not only means 50 and 75 rupees. Arey, these are the values on an as is basis. मतलब आज के तारीख में these are the value of the goods. But from my location, I have to shift the assets to the marketplace. I have to shift the goods to the marketplace. And to shift them, I will be incurring transportation cost. So I am incurring 50 minus 5, 45 rupees will be my net proceeds at this case. Whereas to move it from, let us assume Mumbai to, let us assume you will be moving it to the United States. So that point of time you will be incurring rupees 35. That means if you have to shift your goods in the domestic market, you will be realizing proceeds of 45. Whereas in the export market, if you try to sell, your net proceeds are going to be rupees 40. Your net proceeds are going to be rupees 40. So therefore, now you tell me, between 50 and 75, it appeared that export is the most advantageous. But wait a minute, you had not considered transportation costs there. If I consider the transportation cost, which I have to consider by the way, why? Because I'll be actually moving the goods from my side to the marketplace. So when I consider that, then the net proceeds that accrue to me is 45, which is higher than 40, which means that the domestic market is my most advantageous market. So you will always reduce your transportation costs. You will always reduce your transportation costs. But wait a minute. Wait a minute. Now, let us take the case of a transaction. Let us take the case of a transaction. Let us take the case of a what you can say, a transaction where it is not wheat flour, but it is only wheat. Okay. So what happens is when you have these commodities like agriculture or these pulses, grains, etc. What happens is, जो farmer है, for his goods to reach the end consumer. See, a farmer produces his goods, wheat, rice, pulses, grains, etc. I'm taking a simple example. That is what I'm doing. I'm giving you more examples of transportation cost in some time. Okay. Now, once that is done, a farmer produces. Then he will go and give those goods in the marketplace. Then the market will give it to wholesalers. Wholesalers will give it to retailers, and retailers will ultimately sell it to the consumers. So between the farmer on one side and the end consumer on the other side, there are a lot of movements. There are a lot of middlemen who are involved, and for each of these people, in between you will start to incur something known as transaction costs. In between you will start to incur something known as transaction cost. When the end customer, today if I buy 2 kgs of wheat, the farmer is not going to get 40 into 2, 80 rupees per kg for his 2 kgs. He will never get 80. 80 though I am paying, but from whom I am buying, he will retain some margin. Then the other person on the upper side of the chain, he will retain it. Then the next one will retain. And when it finally comes to the farmer, the transaction cost, if I pay 80, he may be getting, let us assume, 65 rupees. He may be getting only 65 rupees. The 15 rupees which is lost in between is what is known as the transaction cost. And therefore, if we deduct that 15 rupees, the price actually comes to rupees 30 per kg. The price actually comes to rupees 30 per kg. Whereas in the export market, you will be having, suppose, transaction cost of 15. So this comes to rupees 25 per kg. This comes to rupees 25 per kg. And that is when you will decide, sir, which is my most advantageous market? The market which maximizes your proceeds. And what is your proceeds? This is your price minus the transportation cost minus the transaction cost. So this is what you are going to determine. This is how you are going to determine the proceeds. This is not fair value minded. This is not fair value. This is just the proceeds. So domestic versus export, your wheat is fetching 30 rupees per kg in the domestic and 25 rupees per kg in the export. So what is going to be your place or marketplace where proceeds are highest? Sir, it is going to be my domestic price. And therefore, which marketplace will you refer? You will refer to the domestic marketplace for determining your fair value. Transaction cost includes brokerage, commission, etc. to effect the transactions. to effect the transactions. Okay. So you have a farmer on one side, you have the consumer on the other side. In between, you will be having agricultural produce market, your APMC, or what we call as horticultural department. This will sell it to wholesalers. Wholesalers will sell it to retailers. Retailers will sell it to the consumers. Okay. So suppose for 2 kgs of wheat, 80 rupees is charged to the consumer. Rupees 80. Yes. I will pay 80 rupees to the retailer. Do you think farmer will get 80? Never. बेचारा फार्मर को तो पहुंचते पहुंचते शायद उसको 65 रुपीज मिलेगा. Why? ये 15 रुपए कहां चला गया? Well, he is going to retain rupees 6. He is going to retain another rupees 6. And he is going to retain rupees 3 for the storage. So 6 plus 6 plus 3. These transaction costs are what are included in that 80 rupees. So I will be deducting this in order to arrive at net proceeds. In order to arrive at proceeds. These 6 plus 6 plus 3. These are transaction costs. These costs have to be incurred to ensure that the farmer is able to sell the goods to the consumer. In order to ensure that the farmer is able to sell the goods to the consumer. Pretty much like, suppose a seller wants to sell the goods through Amazon or Flipkart. Through Amazon or Flipkart. If they want to sell the goods through Amazon or Flipkart, Amazon Flipkart is an aggregator in between. For every sale made by that person, Amazon will retain a facilitation fee or an aggregation fee. Why they will retain that? Because they are facilitating the meeting of the customer and the vendor on either sides. So a facilitation fee will be incurred, and that facilitation fee is what we call as the transaction cost. Is what we call as the transaction cost. If I have to differentiate between a transport cost and a transaction cost, it is very simple. Transaction cost does not alter the nature of the asset or the liability. Transaction cost is only to facilitate the transaction. Facilitation fee, what we just now discussed. What is the facilitation fee? It is just ensuring that, suppose I place an order today for, let us assume I place an order for a cell phone today. And here I am having a company like, you take any company, let us assume Sony for example. Okay. Sony through its store wants to sell the phone. I want to buy the same phone, but Sony is situated in Delhi, for example, and I am situated somewhere in Orissa. Then how can these two people meet? I cannot meet only. That means Sony can never be able to meet the demand here. To ensure this distance is mitigated, Amazon sets up their aggregation window. On the aggregation window, Sony will come and register. I will come and register. When I want to sell, Sony will ensure that he lists the product on Flipkart or Amazon. And for this listing, Amazon or Flipkart will charge a facilitation fee. Is this facilitation fee changing the configuration of that asset? Is this configuration fee changing the nature of that asset, changing the feature of that asset, changing the characteristic of that asset? Answer is no, it's not. It is just to ensure that the customer and the seller meet each other and exchange goods for cash with each other. Many times Amazon may also put a delivery charge on the customer. Or if your order is below a particular value, they will include some charges. Those charges are not affecting the asset per se. Rather, it is only for facilitating the transaction. And because it does not affect the asset in question, it does not affect the liability in question, it is merely a transaction cost. That is how you evaluate. Whereas the transportation cost alters the nature of asset. Let me take another example for you to understand transportation cost. Okay. Suppose I have old mills, land with old mills somewhere in an industrial city. Okay. So land with old mills is there, and those mills are all मतलब वो खराब हो गए, बर्बाद हो गए, but वो खंडर बचे, ruins are left. Okay. Ruins of those mills are left. Now you want to sell this asset. So this becomes held for sale. Ind AS 105 will apply. And when Ind AS 105 will apply, what are you going to do? Well, you will have to do the fair valuation less cost to sell of these goods. That means you will calculate the fair value. If I have to calculate the fair value, I will not have a principal market, because in India we do not have a principal market for immovable property. इमूवेबल प्रॉपर्टी को हम लोग एक एक्सचेंज में ले जाके नहीं करते. It is based on a transaction between buyers and customers directly. And since I am basing these transactions between buyers and customers directly, I will have to determine my most advantageous market, because my principal market है ही नहीं. I don't have a principal market. And therefore, when I go to determine the marketplace, the most advantageous market, वो बोलेगा, the customer will tell, देख, I want the land. ये जो तेरा old mills है ना, वो नहीं चलेगा, because मुझे इस पे नया construction करना है. I have to build something extra. And if I have to build something extra, I will have to demolish what is there here. I cannot build on the ruins. I will have to remove those ruins, or you remove those ruins and give me. So today, if I have to do a fair valuation of that particular land with old mills, then what I'm going to do is total value of land plus mills. So this is the total value of land plus mills minus cost of demolition. So this cost of demolition can be similar to your transportation cost. That means what? Is it altering the nature of your asset? Absolutely yes. I am demolishing my existing mills. I am demolishing them. I am changing the landscape of what is there. And then I am selling. So any cost which alters nature of asset or liability, that becomes your transportation cost. Here I am selling the land, but for the land I had to dispose of those those old mills. And that is why the demolition cost of the old mills becomes something similar to a transportation cost, where it is changing the characteristic of the asset or the liability. And that is why we will be deducting that. Did you understand transportation cost? Any cost which changes the nature of the asset, that becomes your transportation cost. Have you understood? Yes. Yes. Have you guys understood transportation cost and the transaction cost? Yes. Come on, tell me. Yes. Did you understand? Uma has confirmed. Shriram, did you follow? I'll address your query in some time. Okay. Okay, Nidhi has also confirmed. Namrata has confirmed. Okay, fine. So, transportation cost alters the asset itself, alters the liability itself, alters the commodity itself. Whereas transaction cost is merely facilitating. It is a mere facilitation, nothing else. And therefore, transaction cost cannot be considered for fair valuation. Sir, come again. आपने कहा था अभी कंसिडर करना है. You will consider transaction cost in determining the proceeds. Proceeds के लिए you will consider transaction cost. Sir, why? Because I am determining the most advantageous market. And the most advantageous market means जिसमें मेरे को पैसा ज्यादा मिलता है. पैसा कहाँ ज्यादा मिलता है? You will get the money the most only in the cases where you are having, you are going to deduct the transaction cost as well. So from the available price in that particular market, you will deduct transportation cost, you will deduct transaction cost to arrive at proceeds. So you will look at different marketplaces, and the marketplace where your proceeds are maximum, that goes and becomes your most advantageous market. That goes and becomes your most advantageous market. Have you understood everything about most advantageous market? Yes, most advantageous market, all clear? Yes. Okay, please repeat the last sentence. Okay, so your most advantageous market will be the one where proceeds are maximized. So you will compare 2, 3, 4 markets, जो भी है आपके हाथ में, and you will compare what? You will compare the proceeds. What are the proceeds? What is the selling price in that market minus the transportation cost of that market minus the transaction cost. The transaction cost is not an asset specific cost, but it will be considered for the purpose of determining the most advantageous market. And once you identify the most advantageous market based on the maximum net proceeds, you then proceed to calculate the fair value. You then proceed to calculate fair value. Sir, what is my fair value? Sir, your fair value is going to be price minus available price minus transport costs. That's it. That's it. Okay. So your fair value is going to be nothing but price less the transportation cost. Sir, why you did not deduct transaction cost here? Because transaction cost is not asset specific cost. It is transaction specific cost. It is not affecting the asset in any manner, and therefore it is not deducted in arriving at the fair value. But why do you include it in determining net proceeds? Because net proceeds, you have to incur the transaction cost to ensure the transaction flows through, and that is why net proceeds are included. Is it okay? Yes. Sure. Yes. Any doubts? Anyone? तुषार समझा आपको? यस. श्रीराम, निधि, उमा, नम्रता, सैयद, पानु, विवेक, जानवी, हरिता, Lipika, did you follow? Yes. So transportation cost could be any cost that alters the nature of your asset. So don't think मेरा अपना सामान ट्रक में बिठाऊंगा, ट्रक से लेके जाऊंगा, तो जो डिलीवरी चालान देगा, the cost that he gives, the invoice by the transportation company, सिर्फ वही होगा. Please don't think like that. Okay. It may be, it may not be that way. Okay. So this is how it is. Yes. All right. So with this background, with this long discussion that we had today, we have determined our fair value. कि भाई fair value में what all is included? What all is included in my fair value? All right. Anybody has any doubts in the fair value definition? Anybody has any doubts in the fair value definition? All clear? Yes. Okay. So we quickly run through the notes and then we shall see if we have missed out on anything. In all probabilities, we should not have missed out anything. Okay, but let us just see. Fair value is market specific and not entity specific. We have discussed this. It considers the characteristics of the asset or liability. I told you when I gave the example of plot of land, which could be farm or it could be residential or commercial. However, restrictions or conditions that might be related to a particular entity should not be taken into account. Regardless of what the counterparty does or what I do, that should not be considered while doing the fair valuation. Okay. Because a fair value will be based on market participant assumptions. I told you that also. Measure the fair values using the assumptions that the market participants would use when pricing the asset or liability. So what is the rule? Entity specific restrictions or conditions are ignored. Asset or liability specific restrictions or conditions transferred to the buyer are considered. So in that case also we have discussed. Okay. So suppose like the case where the land had only the permission to do agricultural activities. I told you what would be the fair value. Okay. So that is something which you have already seen. So go through these two questions for homework. These are just examples. You can read through them. Okay. Next, we move on to a small concept known as unit of account. Kuch nahi hai. What happens is many times it is not necessary that you measure the fair value of a single asset or a single liability. Sometimes what happens is there may be groups of assets or liabilities which you have to consider together. For example, you are let us assume that ITC Limited. Okay. I'm just making up this example. ITC Limited it is currently dealing with stationery. It is dealing with the tobacco products. It is dealing in the hospitality sector. So ये तीन sectors है उसके. Okay. Hospitality, tobacco, and the last one is stationery. Now suppose it decides one fine day that I want to dispose of my tobacco related activities. Okay. Then what it will do, it will come forward and tell that, look, I have these assets and therefore I want to, what you can say, I want to record them as held for sale. So when I record them as held for sale, I will have to do a fair valuation. Now you have 2-3 points. First one is, will you do line by line fair valuation of each asset or will you do a fair valuation? Will you do a fair valuation based on the division as a whole? See, if I talk about the tobacco goods, then uska machinery, uska inventory, everything will get a separate value. Whereas if you consider it as a slump sale, if you consider it as a slump sale, at that point of time, what is going to happen? At that point of time, you will not measure the fair value of individual assets, individual liabilities. Instead, you will measure the fair value of the asset and liability together. Is it okay? So the level at which an asset or a liability is aggregated or disaggregated, that is the meaning of unit of account. It could be a whole division, it could be a particular block, it could be a particular issue. All right. So that is how you will determine the unit of account. It could be a single liability, single asset, or a group of assets or a group of liabilities. Is it okay? Yes. So you can do the fair valuation either independently or together. Measure the entire fair value of the division. That's it. Okay. All done. Is it okay? So ये तो छोटा सा concept है, not much to worry about. You can go through these two as homework. Next, market participants we have discussed. What are market participants? They should be independent, not a related parties, etc. Should not be under any duress, stress or force. Should have reasonable and sufficient information about the same. Okay, so that is something you will have to, we have already discussed. So go through this for your homework. Most appropriate market, I discussed principal market and most advantageous market here. So just go through this for homework. Okay. All right. Anybody has any doubt so far? Fair value, I gave the definition here. Available price less transport costs. Yes. Whereas net realizable value, that is the net proceeds, is fair value less transaction cost. That means price less transportation cost, less transaction cost. Less transaction cost. Yes. Have you understood? Please confirm one last time, everyone. Yes. Yes, Shriram, Namita, Tushar, Lipika, Nidhi. We have discussed all these things in today's slides. Yes. Please confirm once. All right. So, Uma has confirmed, Nidhi has confirmed, Tushar, Shriram, Namrata, Sayyad, Vivek, Harita, Purnima, Mukesh, Naveen. Yes, all clear. Nidhi has also confirmed. Okay, great. So, acha, 1 second. Shriram's query is there. So now, sir, if at the time of trading the commodity on the market, there is a particular price, but at the time of sale, the price varies. In that situation, what shall we consider? See, when I'm doing my fair valuation of assets or liabilities, that asset is never sold. So you will look at the closing price on that particular exchange. You will look at the closing price on that particular exchange. That's it. Because you have a principal market, you have identified it. So whatever is the price on that exchange, that itself becomes your fair value. Is it okay? Yes. You are not selling it. So you should not be worried about the fluctuations during the period, during that particular day. As at the closing hours, whatever is your valuation, you will have to consider that. Is it okay? Yes. All right. Okay. Shriram, is it clear? I hope I understood your query. Okay. All right. So with that, we end our session for today. Tomorrow will be a lot of things to do, because tomorrow we will do valuation of non-financial assets, financial assets in brief. Today evening, I'll be uploading one answer sheet. Please download that. Okay. Because there are a number of examples which are there, which I will be running you through. So therefore, I will need you to download that today evening, after today night only, practically, because I come home late. So after 9:30, you can just log in and check. So if that is possible, then download and keep it ready for tomorrow's class. Okay. So that's it for today. See you tomorrow, same time, same topic, revise and come. Okay. Revise and come. Tomorrow will be faster because today we had to discuss some concepts. So I took it slow, but tomorrow it will be pretty fast. Okay. We should be completing the session tomorrow, then day after. Yes. So that's it. Any feedback that you have, please tell me or write to the institute. See, because we cannot see each other, we cannot interact with each other apart from the chats. It may be difficult for me to understand whether I'm fast or slow or whatever. So please give your feedback so we can revert back. Okay. For some of the topics, I give notes. Where I give the PowerPoints, I don't give the notes because I would prefer to explain so that you go with the concepts back. Okay. Thank you, everyone. Take care and see you guys tomorrow. Attend in good numbers. The institute has a good initiative. So please ensure that you take maximum benefit out of it. Thanks. Thank you, Nidhi. Thank you, Sriram. Thank you, everyone. And hope to see you guys tomorrow morning. Okay. See you.